So start off with who is actually going to be affected by making tax digital. There are sort of two broad categories. One is landlords, and the other is people who have a sole tradership, so a certain type of self-employment. Today, I'm really just focusing on landlords, and within landlords, it's only landlords who own properties in their personal name. So if you exclusively own property in a limited company or some other vehicle, then making tax digital may not apply to you, at least from the property point of view. But if you're a landlord and you own property in your personal name, then you need to keep listening and see if you are caught by the rest of the criteria. And specifically, that criteria is all around the amount of rent. The sort of overall criteria is income, and that covers property income and sole trader income. For a sole trader, it's gross income. For a landlord, gross income means the amount of rent. So it's not profit, it's not allowing for any kind of expenses or anything else to be taken off. It's just the actual total amount of rent that you receive. So on a sort of basic level, if you receive £50,000 of rent or more, you will need to start doing Making Tax Digital from this April. If you only receive £30,000 or more, then you get an extra year until April 2027. And if your rent is £20,000 or more, then you get until April 2028. I've also included sort of what those annual figures equate to on a monthly basis, because that's obviously the way we often refer to rents as landlords. And those 20,000, 30,000 and 50,000 amounts are combined between rent and your sole trader turnover if you happen to be both a landlord and having your own self-employed business.